So today we're going to talk about this so-called 2023 stock market crash that seems to be everywhere at the moment. If you look at the media, they're pushing that the 2023 financial situation is going to be awful. The stock market crash is going to continue into 2023 and is going to get worse, potentially on the levels of the Great Recession in 2008. And if you look on the YouTube scene, you'll be able to see that there's big fire flame backgrounds with 2023 stock market crash that is going to tank the market, and you should sell all your stocks now and go cash heavy. And we're going to talk about that and what could potentially happen in 2023, and if all this fear that's out there is the correct thing to be doing right now. So yeah, we'll get stuck into this video. First of all, apologies if I don't sound absolutely amazing. I'm absolutely full of cold right now, so I might sound absolutely terrible, and I apologize for that. Or maybe to some of you guys, I just sound like normal. So yeah, we'll get stuck into this situation right now. Also, there's only 2 days left on the Patreon Black Friday sale. You get 2 free months if you sign up annually here. And like I said, I'll be closing that in 2 days time, or actually there's 20 places left. So whichever comes first, 2 days or 20 places, whichever goes, we'll shut that deal off and it won't happen again for a very long time. But let's get stuck onto this situation. So S&P 500, it's been a awful 2022 in the stock market. Year to date, the S&P is down 16%, and that's with the rally that we've had recently where it's up nearly 10%. So before that, it was a very awful year in the stock market, and it's been painful. It's been painful to be a long-term investor. You basically sat through a full year just seeing your investments tick down more and more and more for most stocks anyway, and it's been painful. Along the way, we've seen investors unfortunately leave the stock market. We've seen a few people that have just seen this year get worse and worse, have gone, you know what, I'm stepping away from it, I'm not part of this investing game anymore. And it's got to people, and if you still made it through, I mean, bravo to you guys, because it has been tough. And we look at the situation, and it was, look at the first half of this year in the stock market was the worst stock market in 50 years. I mean, that's something to put on your CV. You know, that's something to go, if you do make it through the other side, you know, there will be a day when the S&P 500 reaches back to all-time highs. It's crazy to think about right now, but it will happen. Just as when we were seeing all these highs, if you went, the stock market's going to be from the 5th of November, you're going to say, oh, going into next year, it's going to be the worst stock market in 50 years. You're like, really? It's hard to see the other side when, you're in the euphoria market. It's hard to see a bear market. When you're in a bear market, it's hard to see another euphoria market coming. And it's been tough. But to say you made it through that time frame, the worst stock market start in 50 years is pretty good. And I was looking at the worst years in the stock market, and you can see here, 1931 down 43%, 2008 the Great Recession, down 37%. 1937, 35%, and we get all the way down to where we would currently be this time round, year to date down 16%. And that's actually going to put us here in this spot here, the 7th worst stock market that we will have had. That's crazy to say that you've been through the 7th worst stock market ever in history. And I'm actually quite happy to see if December's like a quite stagnant month. I'd be happy to see it be a stagnant year. It'd be very good to kind of go, put it on this CV that I made it through the 7th worst year in the stock market history. And you look at some of the situations here, when you look at the Great Recession, the tech bubble, World War II, there's been massive events that have caused the stock market to drop this much, and it shows you the devastation that we've had. We've been on a drop that was on the levels of the Great Recession or the tech bubble or a world war. It's absolutely crazy how much pain we've had to endure this year. And a little bit of light here, the odds are that if we do make it through this year, as you can see here, the next year is more than likely going to be positive. If you look at the history, or when you look at these, the worst years, and when you normally have an aggressive drop, you can see here it's actually followed by quite a high return. We say that the average stock market S&P return is 8%. It's very rare that it actually performs 8%. Sometimes it's down 20%, and then next year it's up 20%, and it's crazy one side and it's crazy the other side. So positive news is that history is on our side normally when we do have an aggressive drop. So that's a positive going into 2023. But the key thing I'm going to say going into 2023 is, if you see any headlines saying 2023 is going to be an awful year, don't believe it. No one can predict where the market's going to be. No one in 2023 will be able to predict exactly where the market's going to go. And quite often, what happens is the opposite happens when you try and predict the market in a short-term time span. You look here, this headline here says 2022 will be a year for stock pickers, say experts, and will be positive. There was a lot of articles out here that they've been hidden down in the pecking order a little bit from 12 months ago. But going into 2022, a lot of people were saying that it was going to be a positive year, and look how quickly that changed. Because what happens in that year, in 12 months, is you can't predict major events, and major events will normally dictate where the market goes. You could look at 2022 and go, okay, the valuations on some stocks were a little bit high, but small caps had already been crushed by this point. Mid caps had already been crushed by this point. So you would have thought they would actually perform quite well, and it just got a lot worse. And there were so many events that happened that we could not predict in 2022, and 2023 will be the same, and they will be, major catalysts on where the stock market goes in 2023, and you can't predict it. And when we look at the valuations, going into 2022, you'll see here that, okay, big tech was a little bit, or the biggest companies in the stock market were a little bit rich, so we could understand them dropping a little bit. But when we look at the mid caps, they were already a pretty low valuation. You would think, okay, they're not a bad valuation going into this year, and now they went to the lowest levels they've been since the Great Recession. That's how low we've got beaten down this year. You look at small caps, they got pushed down to the lowest valuation since the Great Recession as well. And that's really hard to predict. Who would have thought in 2022 we would have that situation? To be on the levels of the Great Recession for the mid caps and small caps. That's why it's unbelievably hard to predict what's going to happen in the stock market in the short term. And what happened in 2022? Well, we had inflation. Inflation skyrocketed throughout the year, and that obviously didn't help things. That led the Fed to hike up interest rates. That didn't help the situation. So you had the combination of inflation, you had the combination of interest rates going up, you had China. China were locking down every time they were getting, 2 cases. Every time there was 2 cases in a city, they went, okay, time to lock you all back up inside again. And obviously that's caused major problems in China, Chinese stocks, as well as the regulation. How many Chinese stocks got hurt this year by regulation that was really hard to predict? They were killed. You got this issues in China, the lockdown, that then obviously went to affect supply chain issues, that affected businesses, logistic prices went up, that obviously caused massive inflation as well. We had the Russia-Ukraine situation. Who would have thought Russia would go invade Ukraine? Even on the eve of the invasion that Russia started into Ukraine, people were still going, yeah, they're not going to do it. And they did it, including me. I was like, surely not. And they went and did it. And obviously, this story hasn't really planned out how we thought it probably would. I would say that we were all looking at this situation and thinking, Ukraine's probably going to be overrun within a month or two. And, obviously they've dug in quite deep and made it last a lot longer than what we probably thought it would. When you looked at the military difference between Ukraine and Russia, and I won't get too much more into that whole story, but obviously that obviously affected a lot of businesses, financials around the world, oil prices as well. Logistics went up sky high. We went through 2021, especially when we went towards the back end. We saw a lot of people renewing the container rates, the shipping, and that obviously was sky high. And now we're starting to see that come down to a lot better levels than where we're at kind of pre-pandemic levels. So that's a benefit going into 2023, but obviously that affected a lot of stocks in 2022. The dollar. This was unbelievable in the last few months how much this is starting to affect businesses. As we went into 2022, the dollar absolutely skyrocketed. That affected a lot of companies' earnings. We've seen how many times have businesses reported earnings and they've gone, oh, if it wasn't for, if we're going on a constant currency basis, it was this, but we got affected by the strong dollar. That's affected businesses this year. Obviously, that's played some part into some companies' earnings, which obviously is something that you really did not predict back in January 2022. So what does this kind of mean for 2023? Is there going to be this crash that gets even worse from where we're at right now? Will we see this crash that all the media is talking about, the crash that's everywhere on YouTube? Will it happen in 2023? Well, here's my thoughts. First of all, if 2022 is anything, a perfect example, we don't know. We don't know what's going to happen in 2023. We don't know if it's going to be an absolutely amazing market. We don't know if it's going to be an awful market. And that is 100% the first thing that I'm going to say. However, if you're forcing me to play my hand and give my guess on what the stock market has for us in 2023, which once again I'm going to say is just my opinion and is definitely could totally go the opposite way. When we look at 2023, the sentiment right now, the sentiment is negative in the market, 100%. And when we normally have peak negative sentiment, as you can see here, which was March 2022, since then it's actually deteriorated even lower. We are at a negative sentiment where normally when sentiment is this negative, the market rebounds 22%, 19%, 29%, 32%, 14%, 22%, 15%, 43%, and that's where we're at right now. And opposite is that when sentiment is normally positive, and we go into a year like, oh, you know what, everything's going to be, all right this year. Normally when people are positive, unfortunately, that's actually where we have the negative returns. So that's something to keep in mind right now. The next thing, inflation. Inflation has been one of the biggest causes of the poor stock market. We've had inflation, costs going up. That's obviously affecting consumers at the moment. The Fed hiking interest rates. So inflation needs to come down. And what's happening right now? Well, since around June time, inflation has actually peaked and we've begun this downward trend here. Now the key thing is that on December we're going to get the next set of inflation out and we're going to get the next set of Fed rates, and that's going to be key because inflation rates come down, the Fed come out and say they're slowing down the interest hikes, and that continues into 2023. That's obviously a major positive. Inflation's coming down, interest rates stop, maybe even get lowered. That's going to be a positive catalyst for 2023. And that's probably going to be one of the main things. So I cannot tell you what inflation is going to be in 3 months, 6 months, a year. I don't know. But obviously that's going to be a key driver. And that's probably a key thing that you'd be looking at to see what potentially could generate the returns in 2023. The next thing, logistics are back down and this should help companies' gross margins. We've seen a lot of companies get hurt by these gross margins because of the cost of freight. That's coming down, so that's a positive going into 2023. And this dollar that we've seen mentioned so much in the last few months is starting to come down. Unfortunately, it still levels at where it was at around July time, so it does still have a fair way to get, say, towards March time, which would be a lot better. But it is starting to move a bit more into the positive direction for us. So yeah, that obviously, once again, I cannot predict where that will be in 3, 6, 12 months time, but that's something to be keeping an eye on. If anything's to go by where we're at right now, is it's still positive out there for something that we're supposed to be entering a terrible recession, for something that's given us the worst stock market in 50 years. We're still seeing consumers go out and spend, and that is clear if you go on the high street. If you look at Black Friday, which just topped online sales, setting a new record once again, it's still very positive out there on what people are spending. There's still not much pullback. There's a little bit of hesitation going on, but not as much as what you would expect to say we're in a major recession. You look at the employment is still holding up, and that is one of the key things at the moment. So we enter 2023, in my opinion, and when you look at the valuations, I still think big market caps are still okayly valued, but small caps, mid caps entering at the levels that were in 2008. Valuations, when you look at the consumer is still spending at the moment, jobs are still holding up. It's not a terrible situation out there. And in my opinion, 2023 is set to be an okay year in the stock market, in my opinion. But like I said at the start, we don't know. Things can change so quickly, as we've seen in 2022, and there's no way to tell if it's going to be a good 12 months or a bad 12 months. I'm just saying, if I was forced as a betting man to say what I think 2023 will have in stake, I think it will be good. But that could obviously totally change. And the ultimate story really from this video is this. We talked about at the start of the video the worst dips in the stock market. You could see here the worst years in the stock market. When we look at the S&P from a long-term picture, it's very hard to see them dips that we just saw. We can see potentially a little bit of a dip through this period here, through the big tech. We can see some of the dip here between the big financial crisis, two of the worst crashes in the stock market. We can see a little bit of the CV dip here. Only 3 of these dips can we really see that much. A lot of the dips before that are very hard to see. And you'll see here, over the long term, 1 year does not really matter in the stock market. It is all about staying for the long term. Staying for the long term, because over the long term, companies should grow their financials, they should grow their profit, they should grow their revenue. And if they do that, you will get a good return. That is the key thing. So with all this said, the key thing really to be focusing on is still your businesses over a long term, longer than 12 months. And if you invest in good companies for the long term, all these short-term issues should not really affect you. And if they carry on doing the correct thing in the long term, you will be rewarded, as you can see in the S&P 500, or if it's an individual stock as well. If that individual stock continues to grow profit and revenue, you should do well in the stock market, and that's the big thing to focus on. So for me, ignore the noise, ignore what's in stake for the next 12 months. My opinion, it will be positive, but that could all be proven wrong very, very quickly. But the key thing is stay focused long term, and that is where you'll get the rewards. And if you bought the correct companies, you will get them rewards in the longer term. Hope you enjoyed the video. See you in a bit.